Hi there, this is Bob Graham with Riggs Asset Management Company. Today I want to do a continuation of that conversation we've had about what's going on in the markets. You know, we talked really since April. We've said we're in this market environment where it's two steps forward, one step back, two steps forward, one step back. And I think that's exactly where we are. You know, we look at what's happening. We're kind of at the tail end of earnings season right now, deep into the fall. And earnings have been pretty good, pretty much across the board. We've had beats. You know, there've been pockets of issues in some of the consumer areas, and even in some companies that are really doing well. We've had little pullbacks, but we kind of thought we were going to get a pullback in September. September turned out to be a decent month. We thought we were going to get a bit of a pullback in October. October turned out to be a decent month. And right now, we've just entered the stage between now and May where it's the strongest period of the year. Now, maybe there's going to be some choppiness here in November, but our outlook is this market's going to continue to march higher. And we think driven by the artificial intelligence build-out. That has not changed. When we talk to people in different industries that are around the AI space, whether it's construction, electrical generation, water filtration, HVAC, air conditioning, got to make those things cool. All of those industries are on track and doing really well right now. So we think that play is in place. The other thing we're seeing is, we're seeing other industry groups come in. Very recently, healthcare has improved a bit. Financials continue to do well. So all in all, we've got technology doing well. We've got financials doing well. Industrials have been doing well. They continue to do well. And now we're seeing healthcare come in. So we think November could be choppy, but we think we're in that market where, maybe we get a little pullback, choppiness like we've seen, but we think the year ends strong. And in fact, between November and May of 2026 is historically the strongest period in the markets. So really for the next 5 to 6 months, our expectations is the market should continue to march higher. Not to say it won't be choppy, not we won't see pullbacks along the way. We think it's just 2 steps forward, 1 step back, and we think it's a continuation of what we've seen, really since the spring of this year. But our outlook is positive. Equity markets look like they're doing well. Fixed income markets are doing well. Our expectation is interest rates should trend down. That should benefit the stock market. So all in all, when we look at things, we think the bond portfolio should do well. The equity portfolio should do well. I know this sounds maybe a little too optimistic to some of you, but we just think it's the continuation of the same trend. We're looking for a good year end. And as you know, your portfolios are doing well. They're well positioned. And we think we're set up to take advantage of what we see as probably a decent year-end rally. Anyway, if you have any questions about this video or anything else, please give us a call. Oh, one more thing. I almost forgot. Hey, we're sending out a letter talking about where we stand year to date on your realized gains and losses. Take a look at that. Give us a call if you have any questions. Now's a perfect time if you have the opportunity to do some planning around your taxes before the year end. So when you get that letter in the mail, give us a buzz, talk to your advisor, and we'll talk about what can be done or can't be done to try to minimize taxes. But we just want you to be aware of where you stand now. Anyway, if you have any questions about that or anything else we've discussed in this video, please give us a call. Your Riggs team is here to help you in any way we can. Thank you very much.